Alright, today we're going to look at demonstration problem 4.1 in your text. There are 4 exercises, and what we're going to do is examine each one and look at the effect on the financial statement each one is going to have. So I'd like you to start by looking at page 210 in your textbook. Page 210 in your textbook talks about inventory and cost of goods sold. Cost of goods sold is nothing more than an expense. You have to buy a product to resell it for a profit, and you have to reflect the cost of goods sold on your financial statements. So we're going to open up a produce stand. We're going to look at what it's like to run a produce stand. We're going to sell tomatoes, keep things real simple. So we start the day in our produce stand with 100 tomatoes, and we know it's going to be a busy week, so we go ahead and we order 300 more tomatoes. Now our inventory we have 400 tomatoes for sale. So what we have to do is we have to understand what our cost of goods sold is, the cost of the tomatoes we purchased. So we have to figure out how much we paid for the 300 tomatoes and what we paid for the 100 tomatoes. And you'll see this a little bit later on in the next few weeks in the text. I believe it's later on in chapter 4 and getting into chapter 5 as well more. Towards the end of chapter 4 and in chapter 5, more specifically, as far as, yes, chapter 5 gets really into it, as far as figuring cost of goods sold using different inventory methods such as LIFO and FIFO and so forth. You'll be seeing those terms either later in this, you'll be seeing it next week. But for now, again, we're looking at what you're paying for 300 tomatoes and for 400 tomatoes, and that's your cost of goods sold. Once the items are sold, they go in as an expense item, just like paying for rent or paying for paper. It's nothing more than an expense. So your merchandise inventory is going to be on your balance sheet, and inventory, as you know, is a balance sheet item. So the merchandise inventory is going to go into your balance sheet. The cost of goods sold, as we just mentioned, is going to be an income statement item, meaning you're going to put the expense under cost of goods sold. The cost of these 400 tomatoes are going to go in as cost of goods sold. You often see it on page, if you look at page 213 in your text, please, page 213, you will see Exhibit 4.3. You're going to see sales revenue, $12,000, cost of goods sold, $8,000, and gross margin is $4,000. SG&A, well, they call it selling administration. Whenever I use the term SG&A, it means sales and general administrative costs. So S&A is $1,000, leaving a net income of $3,000. And as you can see on the balance sheet, merchandise inventory is $6,000. And then the statement of cash flow, outflow for inventory means they spent $14,000 buying inventory under operating activities. So what we're going to do is we're going to examine the T account form. I'd like you to do everything in T accounts. That way you get really comfortable with how to take the T accounts and then create the financial statements from there. Plus, it'll prevent you from getting lost. So spend a moment creating this right here, what I have, or on an Excel spreadsheet or a piece of paper neatly. That way you don't get confused. And then we're going to go through the T account transactions together. So feel free to pause here, get these T accounts down under assets, liabilities, and equity, and then continue on. So the first transaction we have is this. They start the company by selling $5,000 worth of common stock. $5,000 cash goes up, and common stock equity goes up. And again, please reflect back to page 150 of your text so you know how to properly increase cash account and how to increase a common stock account. The next transaction. They pay $4,500 cash for inventory, $4,500 cash for inventory. So there's 3 types of asset transactions: asset source, asset use, and asset exchange. If a company buys inventory, remember, where does the inventory go? Under your asset, liability, or equity section. Hopefully you said asset. Therefore, if you're spending cash to acquire another asset, it's an asset exchange, because at the end of the day, the asset column doesn't change, just the categories in the asset section. So cash goes down, merchandise inventory goes up. they sell $6,000 cash inventory that costs $3,500. This is very, very tricky, so I'll go real slow and please pay close attention. $6,000, Jefferson sold $6,000 cash inventory that cost $3,500. That means, let's break this down into two parts. $6,000 cash, they sell out of inventory for $6,000 cash. So we know we get $6,000 cash coming in. That's the left-hand side of the balance sheet. Now on the right-hand side of the balance sheet, that's sales revenue. They sold it for $6,000 cash. Now the next thing we need to do is we need to reduce the merchandise inventory amount by $3,500. So inventory goes down $3,500. And how do we balance it out on the right-hand side of the balance sheet? Remember what I said about expenses. Cost of goods sold on page 150 of your text is nothing more than an expense. So to increase the expense, we're going to put $3,500 under cost of goods sold debit. Balance sheet stays in balance. Now, the store pays $2,000 cash for operating expenses. Cash goes down by $2,000, and expenses, SG&A, goes up by $2,000. Now I've totaled this up right here for you. This is the total credits. This is the total debits. Company has $4,500 in cash. Company has $1,000 in inventory. So the assets are $5,500. There were no liabilities in these transactions. Now let's look at the equity section. We want to look at retained earnings. The total retained earnings were $5,000. Excuse me, the total common stock was $5,000. And this comes from when they sold the initial common stock for $5,000. This stays the same. And we have cost of goods sold under retained earnings. I'm going to leave this out for a second. We have cost of goods sold, and we have SG&A. That's $5,500 in expenses. And how much money did they make in revenue? They made $6,000. They made $6,000 in revenue. So you can think of it like this. Income, $6,000. Expenses, $5,500. This is a very crude income statement. I'm just doing it for the exercise. So the net is going to be $500. So again, $3,500 for cost of goods sold, $2,000 for SG&A. They made $6,000 in I'll just call this revenue, and that's net $500. So the $500, remember, the income statement flows into the net income off the income statement flows into retained earnings. That's equity. The value of the company has gone up. The retained earnings, the net equity of the company has gone up. So what we have to do is let's look at the right-hand side of the balance sheet now. Equity, common stock, we have $5,000 from this. We know we have cost of goods sold is $3,500, SG&A is $2,000, and sales revenue is $6,000. And therefore that's the $500. That's a $500 difference, and that goes into retained earnings. So the retained earnings section, remember there's two sections to the equity, common stock and retained earnings. So the retained earnings part is $500. And we total those two up, and that balances out. The balance sheet should be in balance on the left-hand side and the right-hand side. Now, what the exercise is calling for is to record the events using the horizontal financial statement model and then prepare a formal income statement and balance sheet. So what you need to do is take the information we've just done, I've just gone over, and put it in a horizontal financial statement model. And then create a formal income statement and balance sheet from there. It doesn't mention anything about the statement of cash flow, but if you would like to go ahead and do it, that would be of tremendous help. That way it would reinforce the concept of you knowing how to create a statement of cash flow. So again, the exercise calling for horizontal financial statement model, then the income statement and balance sheet. And if you'd like to go ahead and do the statement of cash flow, I would greatly appreciate it, and it would benefit you as well. Any questions or problems, please give me a call and I'll walk you through it. Thank you so much. Best of luck with it.